Well, I can't believe, U.S. stocks, they slipped on the virus headlines. We did see that flight into gold, but the move was really early on, and the sell-off in the equities didn't occur until after those Apple headlines.
Yep.
I got to be thinking to myself, if they're closing 11 Apple stores across the country, how are we ever going to be able to go to a baseball game or a football game? It's just absolutely crazy. So, if that is just the tip of the iceberg here, we're probably going to see a lot more stores closing up shop or reevaluating their reopening process. And I think that may be what causes U.S. equities to finally break here, and we get that flight into the safety of gold and also treasury bonds.
Treasuries, if gold was muted on the move, treasuries look to be the same. In the last 5 days, we had a little bit of drift lower for stocks that could have easily put a strong bid into bonds, but we kind of just fizzled out. Kind of did the same thing again today. What do you think is happening here? Without negative rates, is the bond market just done rallying like it used to?
That's the problem, is that the Fed right now is targeting. So there's no telling what kind of action they're doing here, or what other, government agencies around the globe is intervening inside of our, into our interest rates and into our bond markets. So I'm kind of disappointed on the action in the bonds, but it's not to say that, they've been knocked down, but they're definitely not knocked out. I think once U.S. equities finally break down, a lot of people are talking about a V-shaped recovery. This is a bull market. It's one of the greatest markets if you're able to get in near the bottom. The reality is that no bull market has been created with the volatility index north of 26. You look at the average true range on the Dow Jones, 700 points, 250 points on the NASDAQ, 80 points on the S&P. Who can even trade these kind of markets? Not your average retail guy. He's going to get chopped up. He's going to get wiped out.
Yeah. The question here, if you've been riding this big rally up, is it increasingly hard to hold on to those gains? Should you be taking them off if you've been in long, Phil, or can you use...
You have to
Yeah, go ahead.
You have to think to yourself, the net, with all this that's gone on, with there's no growth whatsoever out there at the moment, and all the money in the world that the Fed's throwing at things, with the NASDAQ at a new all-time high, you have to be a fool not to take something off at these levels in case reality sets in, and all of a sudden this is a much slower reopening process. You're going to start to see some of these stocks start to slip. You're going to see a lot of stocks trying to issue new shares, which is going to drive lower PE ratios. I just think that we're starting to shift into a stagflation. Very little growth, high unemployment, lower interest rates, the Fed doing everything they can, and nothing's going to get resolved.
Phil, I think there's a lot of good logic there. I'll push back a little bit, because is there still, though, an implicit read on the virus in there that is just hard to make? The reality, to use your word here, what if this is the worst of the second wave surge? We had tons of protests for 3 weeks straight, and the evidence suggests that all those young people crowding together of a lot of ages didn't really do much yet. If we're just kind of slipping back above one for a couple weeks here, what's to prevent this market from ramping even higher if all the bond money finally goes to work in stocks and we do continue to reopen?
Okay, so the market, certain sectors of the market can go higher. I heard you guys were just talking about the banking sector. I don't think that with interest rates so low, that's going to cause a lot of problem for the financial sector. You start looking at retailers, people are not going to go out and spend that money like they once were. So you're not going to see that sector grow. It's going to take a long time for food, beverage, leisure. We can't even travel right now. I wouldn't even know if I could possibly check into a hotel. How are we going to go on a cruise line? I'll pay for the cruise right now. Let's go on a cruise. Unfortunately, we can't. We can't leave the country.
Yeah, okay. I like that point, too. It's hard, and Norwegian just pushed them back, so you're not going to be riding Norwegian anytime soon. Phil, the question that it comes back to basically is, until there is overwhelming evidence that we're going to have to reverse the progress, do you fight the Fed, though? Do you fight the power of what's happened here the last couple months? How do you know when the Fed put expires?
Oh, that's always a tough one, and that tends to last a lot longer than what people would think. And it's not only the U.S., it's not only the Fed. You look at The Swiss National Bank had been printing aggressively for months. They are using that money, plowing into U.S. equities, and that's the way that they're fighting their own inflation over there, is by being long U.S. equities. They own most of the tech sector that we have. They own all the FANG stocks, and it's that underlying everyone else trying to chase the market higher and buy any kind of dip. The Nasdaq and the gold market are about neck and neck right now, year-to-date performance right around 15%. The S&P 500, it's actually down about 3.5%. So, we're seeing it is a concentrated buy in the Nasdaq right now.